Hello, my name is Sam DeCillis. I'm the Tax Credit Program Coordinator here at the State Historic Preservation Office of Ohio, meaning that my role is to assist new and returning tax credit applicants with any questions or concerns they might have. To that end, OHSHPO has created a series of informational videos for people interested in applying for the tax credits, designed to go over the key points of the program and to help better prepare you. This is the first video. It will focus on a general introduction to the tax credit program, as well as National Register and the federal and state programs. Now, first off, what is a tax credit? In essence, this is just a credit that will reduce the money you owe to the government the next time you file your taxes. The IRS and the Ohio Department of Taxation are the agencies responsible for actually administering these tax credits, so I would look to them for more in-depth info. SHPO does not focus on the financial aspects of the program, only the buildings themselves, whether a building is historic and if the work meets the standards, which I will discuss. In addition, there are two sets of historic tax credits available for people in Ohio, one at the federal level and one at the state level. These credits have different eligibility requirements, so this is something to keep in mind. To qualify for either of these programs, the property must be historic. And now there are three potential avenues here. The first way is to have an individual listing on the National Register of Historic Places. The second way is to be a contributing part of a National Register Historic District, although I should note, not all properties in a National Register District are considered contributing. And the third way is to be locally designated by a certified local government. Not all municipalities are CLGs, so check if you qualify. I should also note that a CLG listing is an option for state projects, not federal projects. A National Register listing qualifies you for the federal and state tax credits, but a CLG designation will only qualify you for the state tax credits. Again, very important thing to keep in mind if applying. Now, let's say you want to secure a National Register nomination for your property, since after all, National Register listing allows a building to have potential eligibility for both historic federal and state tax credits. Well, there's a multi-step process to apply. First, you have to fill out and submit a preliminary questionnaire to SHPO. This is used to determine if your property is likely to qualify for a National Register listing. This is not required, but is encouraged prior to the submission of a National Register nomination, unless you're pursuing a pipeline grant, which does require a preliminary questionnaire. If you're interested in a pipeline grant, which can assist with the costs for a National Register listing, please reach out to myself or to ODOD. After reviewing your nomination form, SHPO will then send you a letter outlining what needs to be revised. You can then submit an updated version. Once your nomination form is SHPO approved, it will then go to the Ohio Historic Site Preservation Advisory Board, or OSPAB. OSPAB holds 4 meetings a year where they review nominations. Last year, they were held in March, June, September, and December, just to give you a general sense of the time frame. At each of these meetings, a SHPO representative will give you a presentation on your property, and OSPAB will choose whether or not to approve it. If approved, it will go to National Park Service for final review. Once NPS has approved the nomination, it officially goes into the National Register of Historic Places. I should note, this process can take a substantial amount of time from the date of initial submission, so be mindful of this as you're planning your project. You can see here a screenshot from our website. It's outlining the questionnaire and nomination process, so this is where you would want to go if you're interested in pursuing a National Register nomination for your property. And in terms of some other requirements, this is something called adjusted basis, and this is a requirement of the federal program only. Now, adjusted basis is basically a minimum cost you must exceed for your rehabilitation plans to qualify. And it differs for each project. It's based on this equation to the left. So you take the purchase price of the property, that's the building and the land at the time you bought it, subtract from that the cost of the land at the time of purchase, subtract from that any depreciation taken for an income-producing property, and then finally, you add on the cost for any capital improvements made since purchase. The number you're left with is the adjusted basis. And again, your rehabilitation plans must exceed this number in order to qualify for the program. For the federal program, I should say. If the adjusted basis is $5,000 or less, your rehabilitation costs must simply be greater than $5,000. And the goal of this is to make sure federal historic tax credit projects actually represent a substantial rehabilitation of the property, as opposed to just fixing up a room or two. And again, just to reiterate, adjusted basis is a requirement for the federal program only. If you're applying with a state-only project, then this is not a requirement. In terms of other qualifying criteria, to receive federal historic tax credits, a property's intended use must be income-producing. You cannot apply with an owner-occupied residential property. If the building you reside in also has a commercial use, you may be able to collect tax credits for rehab work done in the income-producing sections, but please check with IRS. In addition, properties will be used as a single-family residence or multifamily residential condominiums are not eligible for the state historic tax credits. And finally, for both the federal and the state programs, the building owner must approve of the application even if they are not themselves the applicant. Now, here I've got a comparison between the federal and the state tax credit programs. I'm going to go through the federal program first just because it's a little more straightforward. The federal program offers a 20% tax credit against your property's qualified rehabilitation expenditures, which I'll discuss in another video. The federal program has a rolling deadline, meaning you can apply for it any time of year. In addition, it's a non-competitive process. In other words, there's no scoring involved for the federal program. So long as your building is historic and your work meets the standards, you are guaranteed to receive those federal tax credits. However, you must have a National Register listing, individual or district, to qualify for the federal program by the end of the process. I say the end of the process because the federal tax credit program allows you to apply with a preliminary determination of National Register eligibility. What this looks like is basically just a draft nomination for the National Register that you submit with your federal tax credit application while your National Register nomination is still underway. Beyond this, there's the adjusted basis requirement I touched on in the previous slide, the income producing requirement, and the prohibition on owner-occupied residences. For the federal program, pre-application meetings are not required, although they are strongly encouraged, and I'll get into that in a slide or two. Finally, for the federal credit, you can combine this one with the low-income housing tax credit as applicable. And then just a couple of other things for the federal credit. There's a 5-year look-back period. So for 5 years following the award of your tax credit by the federal government, any additional work you do on that property, you must reach out to SHPO for approval, as well as NPS. Otherwise, that work may be found to go against the tax credits and result in those tax credits being rescinded. And then finally, the federal tax credit is non-refundable, so you can only apply that against your tax liability. Now let's take a look at the state historic tax credits. This program is called the Ohio Historic Preservation Tax Credit, or OPTIC for short. Now this program offers up to 25% tax credit. I say up to 25% because applicants can choose to apply for as little or as much of that 25% as they would like. The state program is run in 2 rounds per year, one in the spring and one in the fall. Each of those rounds has a series of set deadlines within them, and applicants must make sure to keep an eye on those deadlines if they're applying for the state program. Beyond this, the state program has a competitive process. ODOD, or the Ohio Department of Development, scores each project and awards the highest scoring in a given round. So again, this is a key thing to note. For the state tax credit program, there's a separate competitive process independent of a building's historic status or whether or not the work meets the standards. Now, you can qualify for the state tax credit program with either a National Register listing or historic designation from a CLG. Again, it's a little broader there. However, there's one stipulation where the state program is a little more strict. For the state program, you must be designated as historic at the start of the program at the time you apply. You cannot do what you do with the federal program and submit a draft nomination. You must have either a National Register listing or CLG listing secured at the beginning of your application process. Beyond this, the state program cannot be a single-family residence, cannot be a multifamily condominium if you're applying. You must hold a pre-application meeting with a SHPO, and I'll discuss that in the next slide. You cannot complete more than 25% of your rehabilitation work prior to application submission, and that's an ODOD requirement. There's a separate ODOD application to fill out, and this is kind of gets to the competitive process I mentioned. So because ODOD scores those projects, this competitive application gets into that scoring process. So you can kind of see how much your project is likely to score ahead of time. And then here's a really key thing to note. Unlike the federal program, you cannot combine the state tax credit with the low-income housing tax credit. With the federal program, you are able to combine that with the low-income housing tax credit. This is not the case for OPTIC. Beyond this, for the state tax credit, there is no look-back period after the project completion. There's none of that 5-year window stuff. You're free to do whatever you want with the property once it has been certified and once that tax credit's been awarded. And then finally, the state tax credit is refundable. So if the state tax credit exceeds your tax liability in a given year, the state will cut you a check for the difference. I should also just note, the majority of tax credit applicants apply for both of these programs together. You can choose to stack these 2 credits if you would like for a maximum of 45% tax credit. If you're doing this, you'll have to adhere to the state tax credit deadlines in whatever round you're applying. Now, as far as pre-application meetings, which I discussed in the previous slide, so you are required to hold one of these meetings with a SHPO staff reviewer if you intend to apply for the state historic tax credits. What does one of these meetings look like? In essence, the purpose of this meeting is to discuss the proposed rehabilitation and documentation before anything is formally submitted. You should bring along before photos, floor plans, maps, drawings, etc. You should go into this meeting with a clear idea of what you want to do with the property, but you should not be wedded to that idea in case revisions are needed to meet the standards, which I'll discuss in the Part 2 segment of this presentation. Now, the building owner is required to participate in these pre-app meetings. They're not required for the federal historic tax credits, but as I mentioned, we strongly encourage it. And I should also note there are a series of deadlines for the pre-application meetings that are pretty strict. So you must request the pre-application meeting by the posted deadline. You must set or schedule this meeting by the posted deadline. And you must hold/complete the pre-application meeting by the posted deadline in order to remain eligible for the round. So again, that's 3 separate deadlines that one must meet in order to qualify for the round via the pre-application meetings. And then I also want to touch briefly on the distinction between the ODOD application and the SHPO application. Both of these must be completed if you're applying for OPTIC, or the Ohio Historic Preservation Tax Credit. However, only the SHPO application is needed if you're applying federal only. Remember, these are 2 different sets of deadlines and requirements. If you're applying for those state tax credits, you must keep track of and meet both of them. So just to touch briefly on the SHPO application, the focus here is on historic eligibility and whether proposed work meets the standards. This is a non-competitive process, so as long as your building is eligible and your work meets the standards, you will receive a SHPO recommendation of approval. And I've sampled deadlines here just to give you a general sense of the time frame in which these program deadlines land. However, I should note these fluctuate depending on weekends. You should not take the sample dates here as a given. Then for the ODOD application, the focus here is on the financial side of things and the project's role in community. Now, unlike the SHPO application, this is a competitive application. As I mentioned, it's a 100-point scale, and the highest scoring applications in each round are the ones awarded. So again, it's a little bit of a different review system there. Now for the ODOD application, again, you can see here some sample deadlines. So there's an intent to apply, which is a form similar to the pre-application request, and then there's that competitive application and fee. And again, these are samples. They fluctuate depending on weekends. You should not take any of these dates as a firm indicator of what the deadline would be in a given round. All right, well, thank you for watching this presentation regarding just a general introduction to the tax credits, as well as the National Register and a federal and state comparison. If you have any other questions, you can feel free to reach out to me at my email here, sdecillis@ohiohistory.org, or you can reach out to me at my phone number, 614-298-2028. Otherwise, you can feel free to watch some of the other videos. Thank you, and have a great day.